Hundreds of businesses, as we're just reflecting with Ahmed, were looted in Gauteng and KwaZulu Natal. The Small Finance Enterprise Agency, SEFA, says it's still assisting some of those affected. The cost of the destruction in July is estimated to run into the billions of rands due to a loss of operation time, theft and damage to property. Let's get an update from SEFA on its efforts to help businesses that are still struggling to get back on their feet. We're joined by Tumi Sefolo, who's the Executive Finance Manager. Tumi, grateful for your time on this Sunday. Welcome to Newsfeed PM. So you have, I believe, you had a deadline for August for people to apply. How many have actually used the opportunity?
Good afternoon, Tembegile, and thank you for having us. We actually extended the deadline to the 30th of September 2021 because we realized that some of the businesses that we are trying to assist were not able to get their applications in on time, and therefore we extended it to the 30th of September 2021.
And a lot of your focus is on uninsured businesses. How big of a space is that in the South African small business economy, and why is it that these businesses are not insured?
So the Department of Trade and Industry and Competition ran a survey shortly after the unrest to try and assess the impact of the businesses that were affected. And that survey revealed that the majority of the businesses were not insured. And that's the reasons behind that. It's a wide range of reasons. As we all know, that the past 12 months or so have really been difficult for small businesses as the country has been faced with the COVID-19 pandemic and the resultant lockdowns. So some businesses had opted to cancel the insurance as a result of that, just so that they can cut down on costs, and unfortunately were caught with this unrest. So that's really one of the biggest drivers. But there are still some businesses that were insured. So the actual malls themselves, so if a mall was burnt down or looted or vandalized, the building itself, the landlord would have been insured. And those claims are obviously being processed through SASRIA to ensure that they return the actual shopping centre to the state it was prior to the unrest. The people that we are assisting are those that are operating inside the mall, because the landlord may return the building to its prior state, but the small business that is operating inside the mall would still require working capital and some funding for equipment that was stolen or destroyed, so that they can then start operating their businesses again.
And you've got a 2 million rand threshold. Speak to us about why you've capped your assistance at around 2 million rand.
So the reason we kept it at around 2 million rand is, firstly, we do have a limited pool of funds. We have a total of 300 million available, and therefore we really want to try and assist as many businesses as possible, and therefore we had to apply some threshold. But secondly, as part of our core business at SEFA, we fund small businesses all the time, and therefore we know that those businesses that would require your higher amounts would generally actually have insurance in place. So I heard just before I came on to the clip that the Shell filling station, as an example, next to Jabulani Mall, is not yet up and running. Now, a business like that would have had insurance, and therefore, because it requires a significantly much more capital, we're talking millions that would be involved to set up a filling station. And it's also operated under a franchise agreement with the fuel retailers. So those businesses would actually be covered. So here we're really looking to assist your medical practitioners, your pharmacists, your smaller retailers that really just wouldn't have the means to restart their business.
But of course, your assistance is not entirely a free lunch. It's what, 60% grant, 40% loan. How do you work around people's ability to repay the debt?
So We have been implementing blended finance for quite some time. And what this does is that with the 60% grant, that is significant. That is money that you won't have to repay. So you'd only repay 40% of that. And even the 40% that you repay is repaid at a concessionary interest rate of 5%. And we've seen that this is a very affordable mechanism to extend relief to businesses. And we actually analyze their cash flows to make sure that they're able to repay. We also structure the repayment depending on the cash flow of the business. Some businesses have got strong cash flows, so then we are able to offer a shorter repayment, which is 3 years. Some businesses need a bit more time, and we extend that repayment period to 5 years. We also offer upfront a payment holiday because we recognize that once we've dispersed the funds into the hands of the business does require some time to acquire the equipment, acquire the stock, and start trading again before they start repaying the portion that is repayable.
Do you suspect you may have to extend again the period for applications?
No. So where we are now, we have seen a good inflow of applications, and we are confident that with the applications that are flowing in now, we would be able to reach the targeted 300 million on this particular intervention. Mm-hmm. I must also emphasize, Thembekile, that we have a separate scheme for informal businesses because we recognize that the intervention for formal businesses and informal businesses would need to be different. So what we've discussed for now is applicable to formal businesses.
Tumi Sefolo, good to speak to you, Executive Finance Manager at SEFA.